One industry quietly underpins almost every technological advancement we see: semiconductors. The demand is relentless, fueled by megatrends like artificial intelligence, 5G, IoT, and electric vehicles. This isn't just growth, it's an explosion, with the semiconductor market projected to become a multi-trillion-dollar industry in the coming years. But with so many companies vying for market share, how do you identify the ones with the most compelling upside potential? That's exactly what I'm here to do today. I've researched the market, analyzed the data, and shortlisted the 15 semiconductor stocks that stand out from the crowd. So, buckle up, because these silicon giants and innovators could supercharge your portfolio. Let's dive in. Number 15. ARM Holdings, PLC, ticker ARM. ARM Holdings is a foundational player in the semiconductor ecosystem, widely known for its CPU architecture that powers virtually every smartphone. Its strategic value lies in licensing its designs, ensuring its technology is pervasive across various end markets, from data centers to automotive and IoT. In Q1 2026, ARM saw royalty revenue jump 25% year-over-year to $585 million, a testament to its expanding footprint beyond mobile. The company is actively diversifying its offerings, increasing revenue streams from CPUs and systems for cloud, automotive, and embedded compute sectors. ARM's record total revenue of over $4 billion in fiscal year 25, with profit doubling to $756 million, highlights its robust financial health, driven by the adoption of its ARM v9 architecture and ARM compute subsystems. However, a recent top-line revenue miss in Q1 2026 and muted Q2 guidance caused a stock sell-off, raising concerns. Furthermore, its forward PE of 85 suggests a premium valuation, limiting short-term upside, and the recent NVIDIA Intel x86 GPU partnership poses a competitive challenge. Despite this, ARM's strategic positioning for energy-efficient AI deployment from data center to edge devices, alongside innovations like Lumex CSS and Xena CSS, underscore its formidable long-term potential in a rapidly evolving tech landscape. Number 14. NXP Semiconductors, NV, ticker NXPI. NXP Semiconductors is a critical player positioned firmly in the high-growth automotive and industrial sectors, demonstrating resilience amidst market shifts. The company recently exceeded expectations with Q2 2025 revenue of $2.93 billion and EPS of 2.72. Its Q3 2025 outlook is strong, anticipating an 8% sequential revenue increase to between $3.05 billion and $3.25 billion, driven by a crucial automotive segment showing mid-single-digit sequential growth. NXP's long-term strategy is heavily focused on software-defined vehicles and AI-driven mobility, an estimated $20 billion market where NXP already holds a nearly 19% share. Acquisitions like TT Tech Auto in June 2025 enhance its middleware capabilities for SDVs, while new S32R47 imaging radar processors push Level 2+ to Level 4 autonomous driving. The company's SDV franchise has surged from $500 million in 2021 to $1 billion in 2024, projected to hit $2 billion by 2027. NXP also bolsters its AI edge computing through the Kinara acquisition and a significant partnership with Global Foundries for optimized power and performance across automotive, IoT, and mobile devices. Financially, NXP's recent bond offerings totaling $1.5 billion optimize its debt structure. While some industrial and communication infrastructure segments face near-term declines, the robust automotive tailwind and strong analyst consensus with a median price target of $265, suggesting 17.2% upside, along with projected 21.89% EPS growth, make NXPI an attractive prospect. Wait for the final breakdown. It could save you from costly mistakes. Number 13. Teradyne Incorporated, ticker TER. Teradyne is strategically positioned at the nexus of semiconductor testing and advanced robotics, capitalizing on the immense demand driven by AI. The company delivered robust Q2 2025 results, with $652 million in revenue and an EPS of $0.57, surpassing analyst expectations. Its Q3 2025 guidance remains optimistic, projecting sales between $710 million and $770 million, driven by AI compute applications, which are expected to account for the majority of semiconductor test revenue in the second half of 2025. Teradyne is actively expanding into silicon photonics and electro-optical test solutions, crucial for the optical interconnects powering AI data centers. Collaborations with NVIDIA and the debut of an AI accelerator at NVIDIA, GTC 2025, highlight its innovation in enhancing cobot perception and path planning, with solutions like the MC600. The company's critical role in advanced manufacturing and testing is further solidified by its recognition as the 2025 TSMC Open Innovation Platform Partner of the Year for TSMC 3D fabric testing. While analyst consensus is moderate buy, some, like Susquehanna Financial, have upgraded targets to $200, citing strong 2026 growth prospects fueled by a projected mobile market recovery and long-term edge AI potential. Risks include the gradual increase in compute market share and the timing of mobile market recovery. Number 12. Texas Instruments, Incorporated, ticker TXN. Texas Instruments strategically focuses on the analog semiconductor and embedded processor market, carving out a niche away from the high-end chip competition dominated by NVIDIA and Broadcom. This lower-end microchip market provides a more stable customer base and fewer competitors for TXN. Despite mid-2025 tariff woes, TXN has a history of overcoming policy hurdles and remains a resilient long-term play. The company recently reported strong Q2 2025 revenue of $4.45 billion, a 16% year-over-year increase, driven by industrial sector recovery. TXN also reinforced its commitment to shareholders with a 4% increase in its quarterly cash dividend, now $1.42 per share, marking 22 consecutive years of increases. A monumental plan exceeding $60 billion for U.S. semiconductor manufacturing expansion, partly backed by up to $1.61 billion from the U.S. CHIPS and Science Act, aims to lower long-term costs, enhance supply chain control, and bolster domestic production, creating up to 60,000 jobs. This aggressive push into in-house 300mm wafer fabrication, with new facilities in Sherman, Texas, expected to begin production in 2025, solidifies its strategic advantage. While Q3 2025 guidance was cautious, leading to an 11% stock dip, it reflects management's vigilance. Analysts generally lean towards buy or hold, with price targets up to $298. Investors must balance near-term market reactions to cautious guidance against the long-term benefits of massive strategic investments and consistent shareholder returns. The closing analysis reveals why these aren't just random picks. They're a strategy. Number 11. Micron Technology, ticker MU. Micron Technology is a pivotal player in the memory market, particularly in high-bandwidth memory, which is indispensable for accelerating AI workloads. Its HBM3E solution, offering industry-leading capacity and energy efficiency, is already embedded in NVIDIA's Blackwell Ultra GPUs and AMD's MI350 series. Micron is poised to further innovate with its HBM4 solution next year, promising 60% more performance and 20% less power consumption. This strategic positioning makes Micron a direct beneficiary of the booming data center GPU market. The company delivered record-breaking fiscal Q4 2025 revenue of $11.32 billion, a 46% year-over-year increase, significantly surpassing expectations, with EPS hitting $3.03. HBM revenue alone reached an annualized run rate of $8 billion in Q4 2025, projected to double in fiscal 2026. Micron's optimistic Q1 fiscal 2026 guidance forecasts revenue of approximately $12.5 billion and gross margins expanding to 51.5%. As the sole U.S.-based memory manufacturer, Micron receives substantial CHIPS Act funding for new manufacturing facilities in Idaho and New York, bolstering its capacity. While the stock has seen a significant rally, analysts maintain a strong buy consensus, though investors should monitor cyclicality risks in the memory market and competition from Samsung and SK Hynix. Micron's consistent innovation, including industry-first SSDs for AI and advanced memory solutions, solidifies its long-term growth trajectory. Number 10. Qualcomm Incorporated, ticker QCOM. Qualcomm is orchestrating a significant transformation, diversifying beyond its traditional smartphone dominance into high-growth sectors like AI, automotive, and PCS. The company reported strong Q3 2025 earnings, with EPS of $2.77 and revenue of $10.37 billion, both exceeding estimates. Qualcomm's Q4 2025 revenue guidance of $10.3 billion to $11.1 billion further underscores its momentum. A key driver is its unveiling of new AI-powered Snapdragon X2 Elite and X2 Elite Extreme processors for Windows PCs, and the Snapdragon 8 Elite Gen 5 for mobile, promising substantial performance improvements, up to 31% faster at ISO power, and advanced AI capabilities for on-device generative AI. In automotive, Qualcomm's Snapdragon digital chassis platform boasts a $45 billion design win pipeline, targeting $8 billion in automotive semiconductor revenue by fiscal year 2029, bolstered by partnerships with Harman for AI-driven in-car experiences. Its 5G advancements are crucial for autonomous driving, and IoT global partnerships, like with UAE, expand its reach in 5G and edge AI. Financially, Qualcomm maintains strong cash generation and a solid balance sheet, supporting growth and share buybacks. Despite competition and wafer cost concerns, analysts largely maintain a moderate buy rating, anticipating significant upside. Its focus on hybrid AI, combining cloud and edge processing, positions it well for future growth. The last one on this list could be the safest bet with the biggest upside. Number 9. Lam Research Corporation, ticker LRCX. Lam Research is a critical enabler in the semiconductor manufacturing equipment sector, particularly benefiting from the market growth for specialized machines that produce semiconductor wafers. The company reported impressive fiscal Q3 2025 results, with revenue reaching $4.72 billion, an 8% sequential increase, and a significant jump from the prior year. Profitability saw notable improvements, with generally accepted accounting principles gross margin expanding to 49.0% and EPS growing 14% to $1.04, beating estimates. For Q4 2025, Lam Research anticipates continued growth, projecting revenue of $5 billion plus or minus $300 million. A significant catalyst for Lam Research Corporation is the surging demand for AI-driven semiconductors, high-bandwidth memory, and advanced packaging, which require the company's specialized deposition and etch solutions. Shipments for gate-all-around nodes and advanced packaging exceeded $1 billion in 2024 and are expected to triple to over $3 billion in 2025. Analyst sentiment is generally positive, with a moderate buy consensus, though some firms like KeyBank have downgraded, citing that recent outperformance was driven by multiple expansion rather than earnings growth. The recent 13% increase in its quarterly dividend underscores confidence in its financial health. We're about to step into the biggest opportunities on this list. Number 8. Analog Devices Inc., ticker ADI. Analog Devices delivered a strong fiscal third quarter 2025 performance, with revenue of $2.88 billion and EPS of $2.05, surpassing expectations and reflecting a 24.6% year-over-year revenue increase. The company projects continued momentum into Q4 2025, forecasting revenue of $3.0 billion and EPS of $2.22. This positive outlook is largely driven by robust growth in the industrial segment, which saw a 23% year-over-year increase in Q3. ADI is strategically positioned to capitalize on the expanding intelligent edge, integrating analog, digital, and software solutions across key markets like digitized factories, mobility, and digital healthcare. The company is making significant strides in Industry 4.0 and robotics, anticipating a doubling of automation revenue by 2030, and is actively involved in developing advanced mixed-signal ICS and utilizing materials like silicon carbide and gallium nitride for enhanced performance in high-growth areas such as electric vehicles and 5G infrastructure. Furthermore, ADI is leveraging its vertical power technology to address new opportunities in AI-driven energy efficiency. Financially, ADI demonstrates strength with $4.2 billion in operating cash flow and $3.7 billion in free cash flow, alongside a consistent 21-year history of quarterly dividend increases. While geopolitical risks, normalization of demand, and increasing operating expenses pose potential challenges, analysts maintain a buy or moderate buy consensus, with a median price target of $277.50, suggesting a potential 12.1% upside. What you'll see at the end could explain why most investors fail. Stay with me. Number 7. Intel Corporation, ticker INTC. Intel is undergoing a monumental strategic transformation fueled by significant capital injections and a refocused AI strategy. The company's stock rallied dramatically in September 2025, jumping 45% following a $5 billion equity investment from NVIDIA, ongoing discussions with Apple, a $2 billion investment from SoftBank, and an $8.9 billion government-backed stake from the U.S. government. This capital infusion is crucial for Intel's IDM 2.0 strategy, particularly for its foundry services division, aiming to regain process technology leadership and become the second-largest semiconductor foundry by 2030, despite near-term operating losses of $13 billion in 2024. Intel is on track with its 5 nodes in 4 years roadmap, with its advanced 18A process node currently in risk production and slated for volume manufacturing this year. The first client processor utilizing 18A, Panther Lake, is anticipated in late 2025, with 70% of its manufacturing planned in-house, though achieving target 50% yield rates for 18A by Q4 2025 remains a critical hurdle. Intel reported second quarter 2025 revenue of $12.86 billion, exceeding guidance, but a net loss due to restructuring charges. The company projects operating expenses to decrease to $17 billion in 2025 as part of a $10 billion cost reduction plan that includes a 15% workforce reduction. Investors are weighing Intel's ambitious turnaround against execution risks and competitive pressures, with Q3 earnings being a key watch point. Number 6. ASML Holding, ticker ASML. ASML Holding holds a near monopoly in extreme ultraviolet lithography machines, making it indispensable for manufacturing the most advanced semiconductor chips at sub-5 nanometer and sub-2 nanometer nodes. This unique position grants ASML immense pricing power and ensures strong demand from industry leaders like TSMC, Samsung, and Intel, underpinning its attractive long-term profitability. The company reported robust Q2 2025 results, with net sales of €7.7 billion, a strong gross margin of 53.7%, and net income of €2.3 billion, exceeding expectations. Net bookings reached €5.5 billion, with €2.3 billion from EUV systems. ASML maintains its full-year 2025 outlook, projecting 15% year-over-year net sales growth. However, ASML faces considerable geopolitical headwinds, with potential revenue stagnation in 2026 due to new U.S. tariffs and ongoing export restrictions to China, which is expected to normalize its revenue share to 25% in 2025. Analyst sentiment is mixed. Morgan Stanley, UBS, and Wolfe Research have upgraded ratings, citing AI-driven demand and long-term prospects, while others caution about macroeconomic and geopolitical uncertainties. The recent $5 billion NVIDIA-Intel partnership is also viewed positively, expected to further boost demand for ASML's essential equipment. Stick around, this list hasn't peaked yet. Number 5. Applied Materials Inc., ticker AMAT. Applied Materials is a global leader in semiconductor manufacturing equipment, consistently demonstrating strong performance driven by heightened demand in AI and high-performance computing. The company achieved record Q3 2025 revenue of $7.30 billion, an 8% year-over-year increase, alongside a record EPS of 2.48, up 17%. The DRAM segment showed significant momentum, anticipating approximately 50% year-over-year revenue growth from leading-edge DRAM customers in fiscal 2025. Despite these strong results, Applied Materials provided a cautious outlook for Q4 2025, projecting a revenue decline to roughly $6.7 billion due to capacity digestion in China and non-linear demand from leading-edge customers. Analyst sentiment is largely positive, with a buy or moderate buy consensus, and firms like Morgan Stanley upgrading to overweight in September 2025, raising its price target to $209, citing a bright outlook for the chip equipment market. Strategically, Applied Materials is enhancing financial flexibility with a $2 billion unsecured revolving credit facility and investing in future growth, including a strategic collaboration with Global Foundries to establish a waveguide fabrication facility in Singapore focused on AI-powered photonics. Its April 2025 acquisition of a 9% stake in BE Semiconductor Industries reinforces its position in advanced semiconductor packaging tools, particularly hybrid bonding technology. While geopolitical tensions and export restrictions remain risks, Applied Materials continues to leverage R&D and its diverse product lineup to capitalize on secular growth trends. If you're serious about building wealth, don't miss the next pick. Number 4. Advanced Micro Devices Inc., ticker AMD. Advanced Micro Devices is proving to be a formidable competitor in the semiconductor space, particularly in AI, data center, client, and gaming segments. The company reported a robust Q2 2025 with record revenue of $7.7 billion, a 32% year-over-year increase, surpassing analyst expectations. Its optimistic Q3 2025 outlook projects approximately $8.7 billion in revenue, a strong 28% year-over-year growth, notably excluding MI308 shipments to China due to export controls. Its Advancing AI 2025 event, showcasing new hardware like the Instinct MI350 series GPUs, which are already shipping and promise up to a 35 times leap in AI inference performance. The upcoming MI400 Helios rack-scale platform for 2026 further solidifies its AI roadmap. AMD has raised its AI chip sales forecast to $5 billion for 2025, with ambitions to reach tens of billions annually, driven by strong demand from hyperscalers like Microsoft and Meta, and diversification into over 40 sovereign AI projects. In data centers, AMD's x86 server CPU market share surged to 36.5% in 2025. Upcoming roadmaps for Zen 6 CPUs and RDNA 5 GPUs will be detailed at its November 11, 2025 Financial Analyst Day. Despite intense competition from NVIDIA and recent Intel-NVIDIA collaborations, analysts maintain a moderate buy consensus with an average price target around $187, indicating potential upside as projected EPS growth from $3.15 in 2025 to $5.09 in 2026 underscores long-term growth. Number 3. Broadcom Inc., ticker AVGO. Broadcom is a powerhouse in AI accelerators, networking solutions, and a beneficiary of its VMware integration, demonstrating robust financial performance. The company reported record Q3 FY25 revenue of $15.95 billion, a 22% year-over-year increase, with a staggering 63% year-over-year surge in AI revenue, reaching $5.2 billion and now constituting approximately one-third of total sales. Broadcom's AI semiconductor division boasts a 79.4% gross margin. The VMware acquisition has expanded Broadcom's total addressable market to over $250 billion, offering a hybrid cloud software stack for secure on-premise AI deployments. Infrastructure software revenues jumped 17% year-over-year to $6.8 billion in Q3 FY25. While the VMware integration faced challenges, including a $102.5 million security settlement and some customer dissatisfaction due to licensing changes, over 90% of Broadcom's top 10,000 clients have reportedly shifted to the VCF stack, creating a more predictable, recurring revenue stream. For Q4 fiscal year 2025, Broadcom anticipates approximately $17.4 billion in revenue, with AI semiconductor sales expanding to $6.2 billion. Analyst sentiment remains largely positive, with a buy rating and average price target of $333.87, and credit rating agencies upgrading its outlook. While its valuation is considered high, its strong fundamentals, accelerating AI growth, and strategic positioning justify a premium. Number 2. Taiwan Semiconductor Manufacturing, ticker TSM. Taiwan Semiconductor Manufacturing Company stands as the unrivaled leader in semiconductor foundry services, a critical linchpin for the global tech industry, driven by insatiable demand for AI and high-performance computing chips. TSM reported impressive Q2 2025 results, with consolidated revenue of $933.79 billion new Taiwan dollars, approximately $30.07 billion US dollars, a 38.6% year-over-year increase, and net income soaring by 60.7%. This robust growth was largely fueled by advanced process technologies, with 3-nanometer and 5-nanometer nodes collectively accounting for 74% of total wafer revenue. TSM anticipates this healthy demand for leading-edge technologies to persist into the third quarter of 2025, with expected revenue between $31.8 billion and $33.0 billion US dollars. The company is aggressively investing, approving over $20 billion US dollars in capital appropriations for machinery and real estate in August 2025. Technologically, TSM remains at the forefront, with its 2-nanometer technology on track for mass production by 2025. Key customers for the 2-nanometer node are anticipated to include Apple, AMD, NVIDIA, and MediaTek. TSM's CoWoS packaging technology, critical for AI chips, is seeing double capacity in 2025, though demand is still expected to outstrip supply. Despite some valuation concerns and geopolitical tensions, Wall Street analysts maintain a buy consensus with an average 12-month price target of $291.82, reflecting optimism for its pivotal role. Number 1. NVIDIA Corporation, ticker NVDA. NVIDIA is the undisputed titan of AI and accelerated computing, a true market powerhouse with a massive $4.3 trillion market cap. Despite a recent slight dip, the stock has delivered colossal returns and continues to impress. NVIDIA reported strong Q3 fiscal 2025 earnings, with revenue reaching $35.1 billion, a remarkable 94% year-over-year increase, and a healthy 74.6% gross margin, primarily driven by its surging data center business. CEO Jensen Huang projects multi-trillion-dollar opportunities in AI and robotics, with the data center market alone potentially reaching $1 trillion by 2028. Adoption of Blackwell is strong among hyperscalers like AWS, Google Cloud, and Microsoft Azure, and sovereign AI initiatives. Beyond data centers, NVIDIA launched its GeForce RTX 50 series GPUs with DLSS 4 for consumer AI and gaming, and projects its automotive business to reach $5 billion in fiscal year 2026, fueled by expanding partnerships with Toyota, Aurora, and Continental for autonomous vehicles. Strategic alliances, including a landmark collaboration and $5 billion investment with Intel, and a commitment of up to $100 billion to build AI data centers with OpenAI, further solidify its ecosystem. Analyst sentiment is overwhelmingly positive, with a moderate buy consensus, underscoring its continued dominance and growth potential in the AI era. Now, let's take a closer look at the raw numbers that underpin these semiconductor powerhouses. Starting with current price, ASML Holding takes the crown as the most expensive at over $950 per share, reflecting its critical, almost monopolistic, position in EUV lithography. Other premium-price stocks like Analog Devices and NXP Semiconductors also highlight investor confidence. On the more accessible end, Intel, trading around $35, presents a potentially intriguing value play for those betting on its ambitious turnaround. When we talk about market capitalization, NVIDIA stands as a titan at a staggering $4.3 trillion, followed by Broadcom and Taiwan Semiconductor, both exceeding $1 trillion. This illustrates the enormous value creation happening at the top tier. In contrast, companies like ARM Holdings at $148 billion and Teradyne at $22 billion, while significant, show there's also substantial room for growth in more focused niches. Revenue figures paint a picture of operational scale. NVIDIA, again, leads with a colossal $130 billion, followed by Taiwan Semiconductor at $90 billion and Broadcom at $52 billion. These are the engines driving massive sales. Contrast this with ARM Holdings, which, despite a smaller $4 billion in revenue, commands a high valuation due to its pervasive licensing model and impressive gross margins. Speaking of gross margins, this is where profitability really shines. ARM Holdings boasts an exceptional 94.71%, indicative of its high-value IP and licensing model. NVIDIA and Broadcom also demonstrate formidable margins at nearly 70% and 63% respectively, reflecting strong pricing power and proprietary technology. Even companies like Taiwan Semiconductor, Micron, and Texas Instruments maintain robust margins above 50%, showcasing efficient operations in a capital-intensive industry. Intel, at 29.76%, stands out with a lower margin, reflecting its current transitional phase and the heavy investments in its foundry business. For earnings per share, ASML Holding leads by a significant margin at $26.10, showcasing its exceptional profitability per share. Qualcomm and Taiwan Semiconductor also post very healthy EPS figures. On the other side, Intel reports a negative EPS of negative $4.76, underscoring the losses incurred during its strategic transformation. This highlights the spectrum from mature, highly profitable giants to those in heavy investment mode. Finally, dividend yield reveals which companies prioritize returning cash to shareholders. Texas Instruments leads with a 3.0% yield, followed by NXP Semiconductors and Analog Devices, offering attractive income streams for long-term investors. Many of the high-growth AI-focused companies like NVIDIA, ARM, and AMD forego dividends, opting instead to reinvest earnings for aggressive expansion and innovation. So these are 15 semiconductor stocks poised for massive upside potential in this AI-driven era. Which of these semiconductor stocks do you think is best positioned for explosive growth in the next 5 years, and why? Drop your insights, predictions, and any other chip stocks you're watching in the comments section below. And if you found this video valuable, make sure to hit that like button, subscribe to the channel for more expert financial analysis, and don't miss our video right here on 7 best AI stocks to buy according to hedge funds.